Hey there, it's Will. I thought I would talk about stop losses with regards to some stocks that I got stopped out of recently, just to kind of talk about that a little bit, because the management of a trade is really important, like when you get in, how you get out, and stuff like that. And if you've been following my videos, you know that I try to follow a 8 EMA uptrend. I try to focus on stocks that are in an uptrend. I use usually good quality stocks with good sales and earnings, but also, or at least sales, like if they're a newer company and growing sales. So you're dealing with quality stocks to begin with, and then if you're in an uptrend, one way to see that is with this 8 EMA. So this is exponential moving average, and you generally want to see closes above, or near the 8 EMA. So what I've been doing, and what I noticed when I'm on Twitter is there's a lot of different philosophies. Some people are long-term holders. People when stocks pull back or start to drop, it depends when they got in, but if they bought down here at the 50, they might be holding, as long as it's still above the 50, or if a stock goes down, they might wait to see if it supports at 50 or 21 move exponential or something. The other thing happens sometimes when people see a drop and the stock is at the 50 or 200 or something, they might buy some right here. I don't follow that philosophy, so it's good to know, like, what is your philosophy, what philosophy makes sense to you. And what I do is I want to see strength. I want to see that the candles are above the 8 EMA in an uptrend like this. So I'm not going to buy it down here, like right at this 50. Now, obviously, if you look in the future and it's way up from that point, you could say, that's a good strategy. But I'm looking at stocks that are in an uptrend in terms of sort of a local recent uptrend. But the 8 EMA can get you stopped out if you're right at that stop, because sometimes it comes down and back up during the day, or it's very close to like here it's opened up below and then it went up, it closed above. This close is really close here. So what I've been doing is using this, a couple things, but the stop is a volatility stop, which uses the average true range. It kind of accounts for some of the volatility. And at the end of each day, I was moving up the stop. You can use trailing stops, which are more automatic, but the nice thing with the green volatility stops is that they kind of also show you when you're in an uptrend, and then when it goes red, it's kind of a downturn. So it doesn't always work 100%, or it might be a short little pullback, but when it goes red, it usually means it's enough of a change to trigger that change. It's not just a little blip here and there. You can see here, like, as this started to come down, like, it didn't flip until it was over here. But when the stock hits that green volatility stop, it would be a sell signal. So with Square, what happened was I moved up my stop. I was in it, and then it stays flat. You see here, if a stock, is flat or basically coming back down, it's not going to go down again. It's going to stay at the same level or go up. And then, so it's like a trailing stop in that sense. And then right here, it triggered that stop. And you notice that the next day it went down again. And so, it's usually a sign of some sort of pullback. Now, you could reverse right there. We don't know what's going to happen, if that was it, or if it's going to come back down to the 50 or what. But you can always buy back in. So that's another thing. People think, like, if you sell here, it's like, oh, you should have held on or whatever. But you can sell, you can buy back again at any point. So I don't like to see closes and just downtrends below the 8 exponential. It also broke through this 21 EMA. And then down here on the MACD and stochastics, you see this decline and a crossover here and increasing derivative oscillator. So momentum is down right now. So I don't think, oh, I'm going to buy because it's you know, it's near the 21 EMA or something like that. I'll show you another one. So there's a good, if you get in here when it turns green and breaks and starts an uptrend, you see this candle right here, a big huge candle. So if it broke here, you might hold to see what happens at the end of the day, but it just kept going down. So it went down another 7% from this stop. So I got stopped out. Now you can see it's sort of sitting on this 21 EMA. But like I said, I'm not just going to buy it because, oh, it looks like it's supporting at the 21. I want to see an uptrend like this. MACD crossed up above the 8 EMA in an uptrend with the green dot. So it's not a buy for me. You can see, like, say for example here, you have this big candle and you're like, oh, okay, we're back, and you're at the 50, but you see how long it stayed there. Now, if you're holding long term, you know that's a period of time, 2-3 weeks, where you know your money could be deployed into other areas. But it's up to you. EXPI, similar situation. Right here, the candle broke the EMA, the 8 EMA, and it triggered the stop loss. So it's fine to buy back in again if you start seeing it going up again, green dots, MACD crossing up, sort of thing. But I'm not just going to buy because it looks like it's supporting at the 21. That's just not how. I don't want to be buying in this sort of pullback downtrend weakness area. ARCG was a good one. It still is, but in terms of its long-term outlook for genomic stocks. But I just triggered here, and we'll see if it starts going up again. It does look like it is supported at the EMA. One thing to consider is, even though genomics has a longer term attraction, you don't know what people are thinking, like in terms of the institutions and that. Like, there's vaccines out now, and there's lots of stimulus packages, and people are going to go back to work, and the remote work at home stuff is going to not be as good. But obviously a lot of people think that it's still going to grow over time. But the bulk, like, people might go back to restaurants and back to work, and I think there's that feeling that that could be the situation. So right now we have kind of a sector rotation back into like financials and nothing crazy growth wise, but like energy, financials, real estate, stuff like that. So we'll see if that trend continues. But let's see what else. CrowdStrike had a pullback. This triggered the stop loss. It is sort of supporting at this point. It's a good company, a good area of security to be in. But when you have this downtrending 3 EMA, a flat 8 EMA, the declining MACD, that could just be a short-term pullback. So it's very close to the 8 EMA, so you don't have to sell. You don't have to have like an actual sell stop. You could have just a mental stop and put an alert here. So in TC2000, if you right click on a spot, you can say, sorry, let me just go over here. Set alert, create price alert, and you can adjust it. And that way you could just decide, you could be warned about it but not do anything, or you could put it down below. You don't have to trigger it right at that spot. So the other thing you could do is wait for the end of the day to see if it closed. And if it's just above that spot, you don't have to sell it. So it doesn't have to be like a hard stop tangibly in the in your system or whatever one you're using. So Ring is approaching those stops. You can see it's been declining here, cross of a MACD, declining relative strength. We'll see if that triggers it. What else was there? Chewy. I had good gains here, and you can see it was going a little bit steep, but you can see the decline in the relative strength here. But this stopped me out here when it crossed down there, and it's sort of sitting flat right now at the 21 EMA. So we'll see if that persists or not. But so like just for an example, like that similarly with ARCG, just because it's at the 21 EMA or like this, I'm not going to grab it. It's just not my style. My style is to get it in an uptrend with strength, you know. And so now if I was holding in your way back here when you got in, you know, you could decide you want to keep it because you know, you're still up quite a bit. And so that's a decision that you have to make. Like if you decide you're going to keep it above the 50, you got to be willing to take a 20+% drop. And if you're, you know, that might get you back to your gains, or you might have sold some of your position. So relating to like you know, position management, if you start getting really good gains in a stock or ETF, you could sell some percentage of it, 25, 50%, and let the rest go. You know, that's one strategy. On the other hand, if you keep the whole position, you make more money if it goes up, you know, keeps going up. So it's kind of going to depend on your personality. If you don't like seeing the pullbacks, lightening your position could help. But on the other hand, you know, you won't have as much of a position, so you won't make as much. So there's a lot of trade-offs. There's no right or wrong a lot of times. And it also depends on your personality and stuff like that. So let's take a look at NEO just for interest sake. NEO's been bouncing a little bit here off the 50, but like I said, it's in this wedge, and so you know, and the momentum is a bit flat here. So I don't personally get into them like this. Like you say, you know, it's like a fractal. If you look, it's like a pattern that you see the MACD crossing up and going up nicely. You see an uptrend in the stock. The 8 EMAs up, the green dots, the volatility stops, and everything is progressing nicely. Then you see the switch to red dots, downtrend below the 8 EMA, or a flat consolidation. So this is kind of wedging. Something might happen soon, but you know, I don't anticipate that, or I don't get in. Like you see all these nice big huge candle here, a nice up candle, a bounce off of a 50. You know, some people buy there. It comes back down. So I'm not, you know, you have to figure out what's best for you. If you want to get a free trial of TC2000 or $25 off, there's a link in the description below. And I use the gold plan, and I have US real-time data, so I can see the real-time, you know, stock prices. So thanks for sticking with me to the end of this video. Talk to you guys later.